Hello, everyone. My name is Matthew Frailey, founder of BreakpointTrades.com. Way back in 2003, over 20 years, we've been providing advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here with our 21 SPY and ES mean reversion systems for individual traders and professional institutions. I have some awesome stuff coming. And if you're a YouTube viewer, you should consider subscribing to us because we put out 5 detailed newsletters a week, dozens of trade ideas, trade alerts to our awesome mechanical trading systems. We've got a great community, etc. So consider joining. But again, I will be providing some future videos on some of these new systems that are coming. And at the moment, we have a very nice system trade that entered on Monday from the RSI oversold condition. Here are some of the stats, but again, I'll discuss that in the video. So let's go ahead and get started here. So this is our backend recorder for our website. This is a technical analysis market review, and it's November 1st, 2023. I hope everyone had a great Halloween yesterday. Let's go ahead and get this puppy started. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Thursday, November 1st newsletter. This is actually the Wednesday, November 1st newsletter. I'm sorry. Anyway, tonight's newsletter, as you can see, divided into 6 major sections. Once again, guys, I added a handful of new actionable trade ideas. Last night, we had some awesome setups. For the ones that I added, GDHG, RRC, IDYA, and I added more tonight. Again, you should make sure you're watching some of those trade ideas and trying to play some of them. And of course, our mechanical trading systems. As far as the market once again followed through today. It's been up every day this week, Monday, Tuesday, and Wednesday. Today, the S&P gained 1%. It's up almost 3% for the week. And the triple Q's NASDAQ gained 1.65% today, and it's up 3.4% for the week. The Russell and IWM were up, or the IWM and Russell and the Dow were up, but not as much. And as I already stated, on Monday, the mean reversion system, the RSI oversold system, triggered a long on both ES futures and SPY, and that is up nicely. In fact, that system may be getting ready to exit here. I'm going to be discussing that shortly. Today we had the FOMC. They kept rates the same, as you know. I'm not going to go into any more details. Tomorrow we have Apple. They report after the close. That's obviously a major event. And of course, Friday is the jobs report. Okay. Again, as you know, coming into this week, into Monday, the market was extremely oversold. Bearish sentiment was through the roof. We had some positive divergence on indicators. So we've had a nice relief rally this week. Anyway, let's go ahead and move on. So the first image here, item number 2, this is the open. They're going to talk about the RSI oversold mean reversion system that kicked along on Monday, as you can see here. And here's some various stats. 100% winning trades, 40. Here's one with a profit factor of 43. So very nice stats. In fact, it's possible that we may see this system exit tomorrow. Remember, it's a mean reversion system. That's what it looks for. First and foremost, sometimes it'll then hold for a longer trend following condition, but the first thing it looks for is a mean reversion. We're getting that. Okay. So again, I'll alert everyone tomorrow if that's going to exit or not, but I'm sure it's going to. And we may go ahead and exit half anyway, even in the morning. So I'll send a SMS text message and an email to all subscribers if I decide to do that. Next. Going back to the general market, so here's the index sector table, what transpired today and this week. So again, solid gains today for the indexes, obviously for the week, nice gains, 3.5% gains for the S&P and NASDAQ. Russell's up 2%, which has been, absolutely the worst index, and the Dow's up 2.64%. Every market sector we follow 21 of the market sectors are all up nice this week, 2-3% gainers, a lot of these. And today, most of the sectors were up as well. Out of 21 sectors, only 3 were slightly down, less than 0.3%. Currency wise, US dollar was flat today essentially. It is up slightly for the week, about 0.25%. Crypto had another pop. By the way, I added a trade idea tonight, MSTR, that's in a nice coil. So that's one to watch for tomorrow. And as far as commodities, pretty much a mixed bag here. The DBC, that's the index, was only up 0.16% today. But for the week, it's down 1.8%. Again, a lot of this is because of crude oil, which again was down 0.75% today roughly, and down about 6% for the week. Natural gas was down, agriculture, corn were down. The big move here was in coffee, which I'm not showing tonight, but precious metals, they continue to be weak overall, but the stocks did outperform today. GDX filled an open gap, and it's possible this could be an area where it forms a higher low. And as far as the bonds and yields, 10-year was down nicely today, 20-year was up. By the way, I think TLT 20-year bonds is a pretty low-risk trade at this point with a stop at the lows. Next, item number 4 shows the economic news calendar. Like I said, we had the FOMC today. They kept rates the same. Tomorrow, Thursday, we have initial jobless claims, factory orders, can't talk today, natural gas inventories. And remember, Friday is the big non-farm job payroll report. Oh, and remember, Apple reports on Thursday, tomorrow after the close. Now, a lot of you probably own Apple, so be aware of that. All right, let's go and move on to the charts. So the first chart below, here's Apple. Remember, this reports tomorrow. It had spent, you can see a little time below its 200-day moving average. It now regained that today, not surprising. And we'll see what this puppy does. One view of this, you could count 5 waves down. Now, this isn't a traditional 5-wave pattern because you have an overlap. Remember, in a typical 5-wave move, wave 4 cannot overlap the low of wave 1, but this would be more of a leading diagonal, and so that's allowed. So you have 5 potential waves here. So again, could this kick, as the market lows in and we kick out an end of year rally? We'll see. But you can see Apple did bounce off this area, and you do have a potential wave 5 in on that leading diagonal. Next. Moving on to the major indexes. So this chart shows you the 5 key major indexes with simple Bollinger Bands. Like I said, coming in to the end of last week on Friday, the indexes were extremely oversold. The Dow, all these were below the lower Bollinger Bands. The S&P was below its lower Bollinger Bands 2 consecutive days. We had bearish sentiment through the roof. You had various positive divergence on some of the McClellan oscillators. So everything was set to bounce. And so far, we've been up 3 days this week. Next potential target would be around that middle Bollinger Band on the S&P and NASDAQ. That's the same as the 20-day moving average. Let's move on and look at the S&P charts. Chart number 7, here's the S&P daily. Again, you can see this kind of leading diagonal 5 waves here. Again, you have your overlap here, but it's not a traditional 5-wave. It would be some sort of diagonal. All right. Nice bounce this week. The S&P cash closed right at its 200-day moving average. Tested it intraday, pulled back a little bit off of it. Logical to expect that. This is a little resistance area, guys. We'll see how the market behaves tomorrow, but nice rally this week. Chart number 8, here's SPY. Now the SPY closed above its 200-day moving average. You can see the same pattern. Also, this is a supply zone. So like I said, this is an area where we could start to see a pullback soon. Next. Chart number 9, here's the monthly view of the S&P. I discussed this, the last time. Again, is it possible that rally from late last year after that bear market move, was that a start of a bull market, or is that a larger B rally of a bear market? We'll see over time, but right now in the short term, I'm focused on those daily and intraday charts above. But if otherwise, if we do get a end of year rally and we form a lower high, it is possible that this is still the overall bigger pattern and we get a move down to the lower channel, but we'll see. We'll trade it either way. Our KISS systems will catch whatever the market does. That's the nice thing about them. So you don't have to guess. And our mean reversions will do, systems will do good as well. Next, chart number 10, here's the S&P KISS system. This is a version I'm actually going to be using going forward. It has a great profit factor of 27, which is pretty astounding. What that means is for every dollar it loses, it makes $27. So let me see, show you the statistics on that. I don't have this in the webpage newsletter, so you can see this in the video. You can see here's the stats. Profit factor of 27, which is insane. 76% winning trades. So pretty awesome. Also, the max drawdown is less than 6%, which is awesome. Anyway, you can see this went long yesterday, and the stop right now, smart trailing stop, is basically right at Friday's lows. Next, chart 11, here's the 4 time frames. Again, nice rally this week. So the daily is the upper left. So again, remember I was talking about this earlier in the week and on the weekend. You can see on Friday when market was very, very oversold, we had a DeMark 9. We had a support cycle, and we had this super wide ribbon, okay, which screamed that, hey, you're going to have at least a mean reversion bounce. And this has played out well. We're still below the ATR. That's your bigger resistance on the daily. On the half day, we closed basically right at it. Okay, so that is, again, like I said, a resistance area as well. And on the lower time frames, we cleared the ATR, which is a positive. Next. Chart number 12, here's a 2-hour view, just showing a similar view as the daily. Nice move up so far. Next. Chart number 13, here's a 60-minute view. Again, nice move this week. This is a supply zone, so we're right into it now. Not a bad area to look to take some profits if you have some nice gains, if you went long on Friday or on Monday with the systems. Next. Chart number 14, here's a 30-minute chart. Again, there's also this open gap here, which we basically filled today. Remember, these open gaps are always a magnet on the cash indexes. You always want to know where those are. So that was filled. So that could be a logical area to pull back from, perhaps. Next. Chart number 15, here's a 15-minute chart. Again, you had a nice little wedge here into Friday, gap up on Monday, and we've worked up nicely higher from the October 17th high at 43.93. We're at today's highs, we basically retraced 50%. You can see where the 61.8% is, 42.83 roughly. By the way, on the daily charts, guys, above, one target ultimately to the upside could be up around 4,300, right up around this 61.8 fib. Next. Chart number 16, here's the 15-minute chart I discussed last night as an education. Remember, we often talk about a bullish break in structure. Well, there's a bullish break in structure and a bearish break in structure. But it's a very simple concept. All of you know about lower, if you're downtrending, you have lower highs, lower lows. Well, a bullish break in structure is when you take out one of those previous lower highs. And you can see all these rallies could not take out the previous lower highs. Okay, but right on Monday morning on the gap up, we took out the previous lower high. That was a bullish break in structure that said, hey, that's bullish. Look for the next pullback to form a higher low, which it did, and it's been working nicely higher since. Finally, chart number 17, here's a 5-minute view just showing the move up this week. Today we had a consolidation. We had initial move up in the morning, then we pulled back into the FOMC, which is typical. And guys, that's another little educational pro tip. What I've noticed on FOMC days, the move you get for the first couple hours in the morning, if you're managed to catch that, reverse that, because that'll often reverse then before the Fed. So that's what happened. You had a nice gain going, then it pulled back, consolidated, and we popped in the afternoon. S&P closed up 44 points, which is a great move. Next, moving on to the triple Qs. Nice rally off this support channel. 20-day moving average is just above 360. Next, chart number 19. Here's the daily KISS system. Again, you can see the KISS system's done very well on the Qs this year. It went long in January, stopped out in late February. Then it went long again a couple weeks later in mid-March. Stayed long until basically August 1st. It tried a little long there in late August, got stopped out, which is fine. Small loser. And it went long yesterday, looking good. Stop is at the low. That's what the KISS systems do, guys. They'll have a whipsaw trade here and there, but they make up for that when they catch nice trends. And they constantly raise their stops, so you're able to protect that profit along the way with those smart trailing stops. Next, chart 20, here's the 4 time frames. Again, very similar to the S&P. On the daily up here, the upper left, you had that DeMark 9 on. You had the very wide ribbon. You had the support cycle. Everything was lined to bounce there. Half day, we're right up against the underside of the ATR, just like the S&P. Next, chart 21. Here's the 2-hour view, or the half-day chart. Now, we never filled that gap below there, but we did regain that broken trend line from Friday, and we're up nicely. Chart 22, here's the 60-minute chart. Nice move out of this channel. And this boxed area is a supply zone. So this is an area that could soon offer some resistance. Here I added fibs from that recent high, 373.74. 50% fib we almost achieved today. Next. Chart 23, here's a 15-minute chart. Again, you can see we're uptrending nicely. Obviously, this is either a wave C or a wave 3 at this point. There's this open gap above, which could be a magnet here in the short term. We're getting close to it. Price might as well just go ahead and fill that gap. Remember, Apple reports tomorrow. Next. Chart 24, here's IWM, small caps. Again, as you know, this has been the worst index this year. Why? Because it doesn't contain Apple and Nvidia and Meta and Microsoft, those stocks that are huge weightings on the triple Qs and the SPY that masks those indexes. Under the surface, guys, if you take away 7 to 10 of the big cap stocks, the average stock has not done well this year. Okay? So the Russell doesn't have that. Anyway, so you can see that head and shoulder played out. Hell of a sell-off from that top of that pattern. Now, the positive here is you can count 5 waves down at the moment. So maybe we can start a larger rally perhaps. This is also a demand zone here. And we've bounced off of it right to the 9 EMA. This broken trend line here would be a resistance if you get back to there. Finally, chart 25, here's a 2-hour view. Again, we had a little positive divergence coming into the week, and that has played out so far. All right, guys, that does it for the indexes. Like I said, nice moves on these. And let me see what futures are doing. Actually, futures are up again tonight. That's S&P ES futures are up 10 points. Let's go ahead and look at some indicators. Just follow up on those. So chart 26, here's the VIX. So the VIX has been melting down. That's nice to see. Nice move up in the market. And just to rehash some of these other things, again, Steve discussed this on the weekend. I discussed it yesterday in the video. But, again, coming into the weekend, we had positive divergence on these McClellan oscillators for the NYSI, Qs, and S&P. And what I mean by positive divergence, with the S&P made a new low on Friday, but this had a higher low. And this divergence, whenever you see that in the McClellan oscillators, usually tends to be a powerful thing. Chart 28, here's the S&P McClellan oscillator. Again, you can see the exact same thing. Higher low versus the S&P. Chart 29, here's that NYSI 9 EMA crossover system. So this hasn't went back on a buy signal, but you can see it's starting to pinch up. So it is something to monitor for when it confirms the next long. It's given pretty nice buy and sell signals this year, as you can see, catching probably 70 to 80% of those trends. It's never going to catch the highs and lows because you have to have reversals for it to trigger a long or short, but it's been pretty damn good. Next, chart 30, here's the S&P versus high yield corporate. The S&P is very correlated to high yield corporate, and when you see divergences show up between the two, it tends to be quite powerful. By the way, I apologize, this chart got shifted, these trend lines. But you can see you had a negative divergence back in mid-October where the S&P had a slight higher high. You had a lower high in HYG that gave you an early warning of a sell-off. Well, coming into this week, we had a nice positive divergence. We had a higher low on the high yield corporate versus the lower low on the S&P, and this has played out nicely. Next. Here's high yield corporate itself, chart number 31. Huge move today. Look at that, up almost 1%. That is a positive for the market. Remember, the S&P follows high yield corporate. I don't have a chart to show you that tonight, but if you go look at a weekly chart and compare the two move pretty lockstep with each other. Chart number 32, here's the 10-year Treasury yield. Nice pullback. In fact, it looks like it closed just slightly below its 20-day moving average, which I said was important. Closed 47.89, 20-day moving average 48. So it did close slightly below its 20-day. That's a positive. Again, you had MACD, RSI divergence up here. So if we end up having some sort of top in rates here, that would obviously help the market for an end-year rally. Again, guys, don't get me wrong. Interest rates are now in a secular bull market, but they're not going to go straight up all the time. Okay. Things move in waves, and interest rates really have been going up for the last 3 years. So we're due for about a year of a counter trend pullback. Next. Chart number 33, here's TLT 20-year bonds. Again, opposite of the 10-year. Remember, they were both in these parabolic moves, starting to break this through this parabolic barrier here. Look at the volume pickup today. Chart number 34, TMF, that's one way I like to play it. That's the leveraged, it's the triple long ETF for TLT. And again, it's a low priced one. It moves, gives you a big percentage of move. Today it was up 6% versus only, 2% for TLT. Again, I think bonds are lower risk longs at this point, guys. They've been downtrending for 3 years. And again, if you manage to avoid the losses in the bond market, for example, TLT was down 34% last year, and it's down, 15% this year. If you've avoided that, they're not a bad risk reward down here at this point. Moving on. Chart number 35, this shows you some of the major sectors. Again, I'm not going to cover a bunch of sectors, guys. So again, most sectors have been up nicely this week from these oversold conditions, as you can see. A lot of sectors were buried below the lower Bollinger Band, stuff like that. Next. Chart number 36, transports. Again, this is what a lot of sectors have done this week. They were quite oversold. Transports here, IYT was below its lower Bollinger Bands for 3 consecutive days. Quite stretched. So far, you've had a mean reversion bounce back to the 9 EMA. Obviously, these short patterns played out beautifully. Next, chart number 37, jets. It's a airlines ETF subcomponent of transports, and this area has been absolutely pummeled. Just look at this tight channel, this down move. Rarely do you see an instrument moving so steadily down in a tight fashion like this. Again, it is getting oversold. I've warned, be careful trying to pick bottoms. Here, when I look at a 2-hour time frame, and I don't have that chart in here tonight, but the pattern looks kind of okay, like it could potentially start to reverse up. So here I added a trend line. If it can take out this trend line at 9 EMA, you might be able to take a shot on the long side with a stop. Okay. Again, you can see how weak this sector is. Even with the move up this week, it's been down. Next. Moving to commodities, chart number 38, DBC, still just chopping away here. Again, I like the bigger picture view, monthly, weekly charts, but I'm not showing those tonight. Chart number 39, here's crude oil, continues moving down. A while back, I had labeled this ABC, and so far this wave C potentially is labeling out. Where it stops, we'll see. It could also go in some sort of 5-wave pattern like we show here for a deeper B, then a C up. Who knows? And could it be a slanted kind of a head and shoulder type thing here with a neckline? Perhaps. Nice pullback in crude oil would also help the markets. Next. Chart number 40, copper. Remember, copper defended this big support area. You can see how important that area has been. We did bounce off of it. That was a good area to go long. There is a copper ETF you could have played, or you could look at one of the stocks. But Otherwise, this is your next resistance trend line. Next, Jabber 41, Bitcoin. Bitcoin's had a powerful move since last week and was up today. Next, now when I look at the Bitcoin stocks, a lot of them haven't done much. They haven't been moving with the Bitcoin. But MSTR here has a nice little tight coil. This is the 60-minute time frame. This is one to watch tomorrow for a quick break. I also like this one fundamentally a little bit. They hold a lot of Bitcoin versus they buy Bitcoin versus trying to mine it. Next, Jabber 43 Mara. Again, you can see the thing, guys. Even though Bitcoin's had a huge move up, this popped last week with Bitcoin and it's been moving down. Now, you have the 20-day moving average here. It's trying to curl up. It could, if you thought this is going to go higher, you could potentially look to buy it here, put a tight stop here at that 840 area. Next, Jabber 44 US dollar, slightly up today. Still not doing too much, but the market had a good day. Moving on, Jabber 45 gold pulling back right to its 9 EMA now. Again, I actually would love to see more of a pullback in gold. Wouldn't mind even seeing it getting down to these moving averages. I am looking to buy the next pullback on gold. Again, you got a nice entry down here that I liked. And if you miss this move, you could watch this pullback. Jabber 46, here's another chart of gold. This has some of the wave counts, more of the patterns. So again, you can see you had essentially a three-wave ABC structure from the May highs to the October lows. I think that was the major low. I added fibs here. I talked about it last night. 38% would be 1944. Could be a good area to go long. Again, the problem is gold. The gold stocks have been underperforming. You can see it on GDX GLD ratio. You can see it's been underperforming. So I think this is going to pull down gold a little bit. Hopefully that's the case. Next, Jabber 47, there's the bigger picture weekly chart, how it bounced off the 200-week moving average. Long term, this area close to 2100 is your big resistance. It's been tested 3 times now. Jabber 48, there's the bullish view of gold that, if it goes up in a wave 3 to new all-time highs. Next, Jabber 49, silver. Again, pulling back still in this overall pattern. Next, Jabber 50, GDX. Again, nice rally off the October lows like gold, pulling back. Still trying to hold this broken trend line here. It formed a doji today. The low got near the 61.8 fib, so this could be an area to watch for a reversal soon. Also watch that ratio. That trend line break could be a trigger. Jabber 51, here's another daily chart of GDX. Notice your moving average ribbon is pinching here. That's often an area on the first pinch after it went bullishly configured where it may find support. And you can see how wide the ribbon was back here in early October where you had the nice bounce. That's where the ribbons are powerful, whenever they pinch and where they get too wide. Next, Jabber 52, here's a 60-minute chart. Again, nice correction from that supply zone. So we filled the open gap there. The ratio is trying to curl up here a bit. You can watch this trend line here as a trigger. All right, guys, let's follow up with trade idea setups. So I like to put out actionable setups in my newsletters. Steve hasn't been putting out as much lately, but I'm pretty good at finding some good actionable setups, especially longs, and they've done pretty well. So here's GDX. This was the long idea of mine early last week. 125.30 was resistance, gave a nice trade, was up nicely today. Make sure you've taken some profits, please. Next, Jabber 54, GDHG was a new long I put out last night. It was a flag pattern. Look at this, up 10.7% today. Your trigger was breaking the trend line. Nice trade. If you caught that, you paid for your membership for a year or two. Jabber 55, RRC was another long idea of mine last night. A simple breakout over this trend line. Nice pop today, up 2.37%. Again, if you bought a couple, few hundred shares, 500 shares, you paid for the membership. Jabber 56, IDYA was another long idea I've had last night. Clean resistance here at the 2780. Nice pop today, up 6.3%. Congrats if you took it. It was a very nice looking setup. Next, Jabber 57 RPTX. This was a long setup of mine last night as well. Mean reversion. You could see how many days in a row it was down. It was quite stretched. You had a trigger here. It did trigger today, but if you didn't take some profits, it gave a lot back. To me, it still looks okay, but it did give some of those. It did give those profits back over that trigger. Keep an eye on it tomorrow. Jabber 58 NXE was the long idea from last night. Still one to watch, guys. Volume patterns look good here. If you triggered today over the slight break of that trend line, just put a stop in place. If you didn't trigger, one to watch tomorrow still. Next, Jabber 59 gas. This is one I put out last night as well. Nice looking cup and handle. You can see today's highs tested that trend line. So very valid. It's tested that trend line 3 times now. One to watch for tomorrow. Next, Jabber 60 MCRB. An idea from last night as well. Resistance is this 160, 163 area. It has not triggered yet. So I'm keeping it on the list. No trigger, no trade. But it's still valid setup. Next, here's the new setups, guys. So Jabber 61 GRBK. It got quite oversold here. Big volume pop. Now you're asking, why would you buy it now? Well, it had a big move here. I think this could follow through on momentum. I looked at a 60-minute chart. Over today's highs, I think it at least moves up to these moving averages for a trade. Jabber 62 CRNX. Nice tight coil. One to watch tomorrow. We like coils because they tend to produce strong moves. Jabber 63 AJG, another new one. Simple breakout over this 237.95. Jabber 64 NR. This also broke out today, but I think it could follow through. Look at the volume. This is one to watch tomorrow, guys. Intraday for a trigger. Jabber 65, the last one, IGMS, another one that's very oversold. Nice pickup in volume today, which is what stood out to me. You have a MACD divergence. Here I added a trigger, basically right over the 9 EMA. All right, guys, that'll do it. We'll see what happens tomorrow. Have a wonderful evening, and thanks for all your support on YouTube. Please make comments, subscribe, like, tell your friends. I'm trying to grow the channel. Take care. Have a good night.